Ever wondered how the concept of banking came into existence? It's a journey that takes us back to the ancient civilizations of Mesopotamia and Egypt, where the very seeds of banking were sown. It wasn't in the modern skyscrapers that we associate with banks today, but in the majestic temples of these civilizations, acting as the earliest financial institutions. From the fertile valleys of the Nile to the bustling city-states of Greece, the concept of banking started to take shape. In ancient Greece, Rome, and India, temples and palaces served as places of financial exchanges. They were the places where lending of grain and silver took place, shaping the core of banking as we understand it today. This was the dawn of banking, long before the advent of coins, paper money, or digital transactions. The idea of financial exchange, of lending and borrowing, was born in the sacred halls of temples and palaces. Thus, the rudimentary forms of banking were conceived in temples and palaces, not in dedicated institutions as we see today. As civilization evolved, so did the concept of banking, but how? Let's take a leap back in time to the Middle Ages. This era saw banking take a more organized form, and one of the key players was none other than the Knights Templar. The Templars, originally a military order, became de facto bankers, safeguarding precious assets and facilitating transactions for pilgrims traveling to the Holy Land. In the same period, the practice of using bills of exchange emerged. This was a game changer, providing a safer alternative to carrying large amounts of cash, especially for merchants who had to travel long distances. Meanwhile, in sunny Italy, banking was becoming a family business. The Medicis, a name synonymous with wealth and power, established a network of banks across Europe, setting the stage for the banking systems we recognize today. This period marked the birth of modern banking systems, with more sophisticated methods of lending and borrowing. So, when did the banking institutions, as we know them today, come to be? The answer takes us back to the 17th and 18th centuries, a time when the world saw the establishment of the first central banks. Two notable examples are the Bank of England, founded in 1694, and the Swedish Riksbank, established in 1668. These were not banks in the way we think of them today, but they laid the groundwork for modern banking systems. They introduced the concept of paper money, a revolutionary idea back then, that replaced the cumbersome system of barter and metal coins. Another significant milestone was the introduction of the gold standard. This system, where the value of a currency was directly linked to gold, brought stability and trust, making international trade more predictable and secure. The establishment of these central banks and the innovative systems they introduced formed the bedrock of today's banking world. The establishment of central banks paved the way for a regulated banking system. How did the advent of technology change the banking sector? Well, let's dive in. Imagine a world where you no longer have to stand in long queues or meticulously fill out paperwork. That's the world technology has shaped for banking. The first major leap was the introduction of credit cards in the mid-20th century. These magical pieces of plastic allowed people to carry their wealth without the weight of coins and notes. Next came automated teller machines, or ATMs, providing 24/7 access to cash, eliminating the constraints of banking hours. The dawning of the internet age brought with it the next game changer, online banking. This allowed us to manage our finances from the comfort of our homes. And then, mobile banking stormed onto the scene, placing the power of banking right into our pockets. These technological advances have not only made banking more accessible, but also vastly more convenient. Technology has revolutionized banking, making it more convenient and accessible than ever before. So, we've seen how banking has evolved, but how do banks actually work today? At the heart of it, banks are like vast, intricate machines that perform three key functions. Firstly, banks accept deposits. Whether it's your paycheck, your grandmother's birthday gift, or the money you've been saving for a rainy day, banks keep it safe for you. Secondly, banks lend funds. They take the money we deposit and lend it to others in the form of mortgages, student loans, or business loans. This is how they generate profit, by charging interest on these loans. Lastly, banks facilitate transactions. They make it possible for us to pay for our groceries, send money to a friend, or receive payment from a client. But banks do more than just these functions. They play a crucial role in our economy by providing a stable platform for financial transactions and helping to fuel economic growth. Banks, with their various functions, serve as the backbone of our economy, facilitating growth and stability.